Well, what's up, everybody? It's Channing, and we are on live for episode number 2 of the Bayou Home Show. Riding solo today because I need to do this quickly because we missed last week. Oh my goodness, we got to get in the habit of this and not forget to do an episode. So, got an exciting episode planned for today. If you're watching this, we are going to talk about zero down payment loans. There's a lot of different options out there available for you, the consumer. If you're a realtor watching this, hey, thank you. For your clients, they have a lot of options when it comes to what type of down payment program they're going to use or what type of down payment program you're going to use. And I want to talk about some of the most common ones. So in today's video, we're going to talk about down payment assistance programs. We're going to talk about USDA. We're going to talk about VA loans a little bit and just kind of discuss what's out there for these borrowers who need help in the down payment assistance arena. But before I do that, I want to jump in and I want to just talk a little bit about kind of a market update, if you will. And so what we saw was last week, we got a great improvement in interest rates after the Fed meeting. The market seemed to like what Federal Chairman Powell had to say in regards to whatever was going on in the market. I'm no market expert, but I follow the experts, and then I share that information back with you. And so we saw tremendous increase, better rates. We saw probably a quarter better in rate directly to you, the buyer or the client. But something happened Friday, and the jobs report came back, and I guess the jobs report was too good. Now, listen, there's a lot of industry people that I respect, Barry Habib, MBS Highway, that are saying, hey, these job numbers are BS, right? They're not this good, but because they appeared to be good, the markets took that, and we have seen rates get worse since last Friday. And today, I believe, or tomorrow, it's either today or tomorrow, we are anticipating, maybe it's tomorrow, uh, another meeting that could affect interest rates, with people saying a word, which is crazy. Like that, this whole thing, this whole house of cards, if you will, kind of rises and falls on what some dude says online, but thus is the world we live in. So just want to jump in real quick just to kind of show you that trend a little bit. We're looking at a trend now where rates have really kind of dropped off over the last couple of days. And I feel like it was worse than this. So I don't know if there was some improvement overnight, but we lost almost 100 basis points yesterday. And it was bad because it was to the point that loans that we were quoting in the fives because lenders were scared about what the market was going to do were coming back in the upper sixes and sevens. And so hopefully that settles down. But that's kind of a market update. We'll do our normal interest rate preview that we do every week later in the week, probably Thursday after that meeting. But that's kind of what's going on in the market. So again, always remember when it comes to interest rates, these things fluctuate. These things, they move every day, right? So there's not always as big movement as we saw yesterday in one day or last week, to the good in one day, but they do move and they can change every couple of days. And then some days you do have some piece of information or some advice or some guy gets up and talk and it does make big movements in the market, just like it does in the stock market. So please keep that in mind as you're getting interest rate quotes and doing different things like that. So that's kind of where the market's been. And so let's go ahead now as we just kind of do a brief update there and talk about these zero down loan programs. And so what I want to do is I'm going to jump in straight into the down payment assistance arena because I think that a lot of people don't know what's out there and what's going on with these programs and what's available and all of that great stuff. And full disclosure, I don't offer all the programs we're going to talk about. So there may be little finer points about them that I'm not aware of simply because we don't offer them as a broker. But I'm going to read you straight from their websites what they have going on. I'm going to talk to you about some of the programs we offer and then going to get into USDA and VA as well. So we'll jump right back in here. And by far, in my opinion, the program that you see most people want or talk about or looking at their options, because they have a very good website. They rank very well on Google when you're searching for these things. They beat me begrudgingly in a couple of key search terms that we look for. But LHC is one of the big boys on the block when it comes to down payment assistance programs. And so what you're going to see a lot of the lenders here locally offer is going to be their MRB and their market rate program. That's one of the two big ones that you are going to see offered, and that's going to be offered to you. And so let's just talk about really quickly what down payment assistance is before we jump all the way in. And so a down payment assistance program is a program that is a grant of some type that's going to give you a certain percentage of the loan amount back to you as a gift or a grant. And then you will use that money to cover the cost for your down payment and maybe partial closing cost or something to that effect. And so down payment assistance programs usually take a couple of different forms or ways of operating. So you will either have the grant program that does not involve a second mortgage on your house, but will have something like a higher interest rate. Because to be honest with you, nothing in this world is free, right? Everything has a quote unquote catch. And so it's no different with down payment assistance programs. You just have to determine if you're a good fit for that program based on the quote unquote catch. And so you're going to have two different types. You're going to have the down payment assistance program that doesn't have a second lien on your house, and it doesn't require you to, stay in the home for a certain amount of time, but you'll pay a higher interest rate. Or you're going to have a down payment assistance program that involves a second lien on your house and requires you to stay in that home for a certain period of time. And LHC is the latter. And so LHC is going to offer you a grant, offer you down payment assistance, either through FHA, VA, or USDA. And it's going to be a second mortgage attached to your house, typically in the amount of 4% of the purchase price of the loan amount. And so you can see that they do a 30-year mortgage, single family units only. So you can't do house hacking with LHC. You've got to be located obviously in Louisiana, and you need to make under 115% of the area median income limit. So depending on the parish or the city that you're in, those income limits can fluctuate ever so slightly. You do need a minimum credit score of a 640 for this program. But in this particular, the Ginnie Mae program, they do not have a first-time home buyer requirement. You get up to 4% for your down payment, closing costs, and prepaid items, and they do not charge origination or discount fees. So that is their Ginnie Mae program. They also have another one that I've seen is these MRB, which is for a lot. The income limit is a lot less. You got to be 80% or less than the area median income limit. You do have to be a first-time home buyer. The property must be located in Louisiana. You must meet the local income requirements, and you need, again, a 640 credit score. The down payment assistance is a little bit more, between 5 to 9% of the loan amount. And then again, here's kind of an example of how aggressive their income limit can be. And so if there's two people in your home, you can't earn more than $50,200 per year, and that's in the New Orleans area, which is one of the higher price areas in Louisiana. And so Baton Rouge is 56. So I don't know how that works out, but yeah, so you can kind of see the gist of what they have going on here with that as well. And I will tell you that just based on my research for this program, and it's going to be the same, it's going to be a soft second, whatever. So you can click here and you can kind of go through this list of approved mortgage lenders, right? What you will find with this program is that it is mostly banks and retail lenders that are completing this program. So brokers, by and large, do not have access to the Louisiana Housing Corporation home buying programs, and I'm sure that's for a number of reasons. I don't know the ins and outs of the back end of the program, if the lenders are footing some of that bill or paying fees to be involved in that program, or how any of that shakes down. But this is very much a program where you're going to have to go to a bank and work with a bank to get that program. And so if you know anything about kind of the differences in lenders and banks and things like that, what you need to understand, again, I'm talking about this program as someone who doesn't offer it, but what you need to understand is that typically banks are a little more strict. And then if you're not working with a broker, typically those rates are going to be a little more when you are a lot more, depending on who it is, with a retail lender, with a bank. But the cool thing is with LHC is they actually post their rates daily online. And so you can see the Ginnie Mae program where they offer the smaller down payment assistance, the 4% down payment assistance. It does have a 7.125 market rate on it today. And then 6.5% is their market for their conventional program. So this is the one that allows you to make up to 115% of the area median income limit, which again is like $50,000 to $55,000. So I'm not going to do that math in my head, but I would assume that's probably like $70,000, $80,000 household income. It has a higher interest rate than what you would normally pay for another loan program, especially if you were working with a broker, where they really do seem to be fairly competitive. And again, this is on 4% assistance, is that MRB program. And so with that program, if you are a lower income person, and this is the way that it should be, I fully support this, and you have a lower income and you are considered low income, they're going to give you a more, it looks like, at least based on their website, a better interest rate to utilize that program to help you qualify for more, because you still have debt to income to consider, and you still have all of those typical requirements to consider. And so you could quickly get in a situation where they'd be willing to give you down payment assistance, but maybe you only qualify for 100,000 or something like that. So I like that, at least on the surface of it. It appears if you are a lower income person, then you're going to receive a better rate if you utilize that program. And so they kind of post they have a lot of different programs, but you can kind of see all of their rates here. And I think the interesting thing to me is that the one that would be available for more people, like the most amount of people, it kind of does have that higher interest rate. And so you're paying that higher interest rate, and then they're also attaching a second mortgage to the property in the amount of the assistance that you receive, which is 4%. And so typically that's forgivable if you stay in the home for a certain period of time. And I had that pulled up, and I don't remember it off the top of my head on what exactly it is, but it could be as much as 10 years. So that's the LHC program. So if you are considering down payment assistance and you're looking at LHC, there's a couple of things I would say that you should know. Number one, remember you're working with a bank most likely. So are you going to meet their internal personal requirements? What are their debt to income requirements, right? Do they cut you off? I worked at a bank, one of the banks that offered this program, and they had like a hard DTI cap at 45%. Well, FHA doesn't have that. So FHA, you go to 50, 55, especially with a 640 credit score. So are you going to qualify for less house using this program? I think the answer is yes. Plus, you're going to have, if you're utilizing the one with the higher rate, you're going to have a higher rate than the market rate, and they're going to attach a second lien to your property. So if something happens in 5 years or whatever their time frame is, I wish now that I had kept that pulled up, so I'm not grasping at the straws on this, but whatever that time frame is, whether it's 5 years, 4 years, 10 years, whatever it is, if something happens and you have to move, you have to now pay that back as part of the sale of your home. And so that can be a detractor as well. However, if you are low income, or you are someone and like you just based on your financial situation, saving up a down payment is never going to happen, and you want to live inside the city limits of one of Louisiana's major cities, whether that's Lake Charles, Baton Rouge, Lafayette, New Orleans, Kenner, Metairie, Alexandria, Shreveport, whatever, Bossier City, then you're like, dude, you just listed off all the major cities. I know. So then it could be a good program for you if you can meet all of the other requirements. And so I'm going to compare at the end of this down payment assistance with my favorite program for people who need down payment help. But that's kind of the nuts and bolts of LHC. The way that I see it is, you've got a second mortgage, you've got a higher interest rate, or maybe, even the lower rate is kind of the market rate, right? It's kind of the market rate, that 6% or less. If you had a 640, you're working with a broker right now, at least your rates would be in the 5. And so you are paying a slightly higher rate. They are attaching a second mortgage to your home. And there is probably, I would imagine, more hoops to jump through just by nature of working with the bank. I feel like that's just facts. So that is LHC. Another popular one, and this is one that a lot of brokers actually do have access to, as well as other lenders across the state, is the CAFA program. Now, this one specifically that I've pulled together is sponsored by a particular mortgage company. Just ignore that. The point is, actually, we may want to, let's see, not do that one, because that one is a special one that offers a higher down payment assistance program. So some of these lenders have their own special programs. Some of the larger lenders, retail lenders in Louisiana, for instance, have their own special program. So I think we pulled up Gateway again. So I think there's one. Let's do GMFS. Yep. Here's the one offered by GMFS. Big bank in Louisiana. Brokers can use them. So CAFA is the Capital Area Finance Authority, and they will give you 4% of the final loan amount. So those funds can be used towards your down payment, your closing costs, your prepaid items. You can buy all your mortgage insurance, whatever. Again, minimum credit score of 640, higher DTI than a lot of programs at 50%. And then they follow all of the same loan limits that conventional and FHA are going to follow. Now, here's where it gets interesting, because you, again, have these income limits. And so this is great if you are low income or if you're like one person. And so when you look at it, you go Calcasieu, which is where we are, you got a $60,000 income limit on conventional and $86,000 income limit on FHA, VA, USDA, and then they're saying 105 here. And again, I'm not sure what that would apply to, but you do have these income limits that you have to fall under, right? And then even on this, and you can go in and you can see all of the different companies that are able to offer this particular loan, this particular down payment assistance program. So with CAFA, we will let's see if we can go in here. Let's see. With CAFA, you're going to get the down payment assistance as well, very similar to LHC. But I know that this one many times is going to be funded by a higher rate. And so you're going to have that higher rate that gets attached to your loan. The advantage is the underwriting for the program is done in-house, typically with the lenders that are signed up for them. And that can be helpful as far as moving the loan forward. But again, it's like other down payment assistance programs. Okay, it's traditionally going to be funded by a higher rate. But again, if you can't buy a house and you can't save up a down payment and you can't qualify for anything else, then it could be fine, right? It could be a good thing. Just like LHC, it could be a good thing. That's kind of the deal. So that's kind of the deal with these two down payment assistance programs. And all down payment assistance programs, again, fall into either higher rate or second mortgage territory. And it seems like even with LHC, you might get a blending of the two. Now, I want to take 4 minutes, 3 minutes, however long, and talk about a down payment assistance program that we have access to that is a little untraditional, I would say, in its approach and how things are handled. Because as you saw with the previous two, there are first-time home buyer requirements on many of them. There are pretty strict income limits on many of them, as well as credit requirements and things like that. So we do have access to a nationwide down payment assistance program as a broker that is FHA based. And so you only need a 620 credit score. And as you can see here, it does max out your debt to income at like 49%, 48.99%. And there are no manual underwrites allowed, which that just means like if it's a tougher loan and we can't get an approval, we wouldn't be able to do it. but the DPA is in form of a forgivable grant. And so what this means with EPM's Empowered DPA program is that they don't attach a second mortgage to your home. So the day you close on that loan, the grant is forgiven. But remember what I said in the beginning of the video. All down payment assistance programs come in one of two forms: second liens or higher rates. Which one do you think this one is? Right, it's going to be the higher rate. Now, what I found so interesting is that the rate on this program is going to be very similar to the market rate on LHC's Ginnie Mae program. So I found that super interesting because, you know, this is traditionally a program that a lot of people use, and I know that the rates on this program are going to be very close to that. So that's interesting. So this one would still have a second mortgage, whereas this one doesn't. So I thought that was fairly interesting. They do allow it on multiple different types of properties, not just single family homes. You can do it on mobile homes and 1 to 2 unit dwellings, not 1 to 4, but you can do 1 to 2 unit dwellings. The other thing, let's talk about some of the other the things that I find very unique about this program. So in order to be eligible for it, you can meet 3 different criteria. 1, you can be a first-time home buyer, then you're automatically qualified. And a first-time home buyer is defined as someone who hasn't owned a home in the last 3 years. Okay. Number 2, you can be equal to or less than 140% of the median, somebody made a little spelling error there, household income limits. So that's huge. That's a lot bigger piece of the pie than 80% or even 115%. And then my favorite is you can be a current or retired employee or volunteer or non-paid member of some type of like hero program, and like education, nursing, firefighter, police officer, healthcare, those types of things. And in education, they even lumped in like Sunday school teacher. So like it's a very broad definition if you need to qualify under that heading. And so it's a pretty neat program in the sense that you have the ability to utilize down payment assistance nationwide. This is a nationwide program. Lot less strict income limits. Yes, higher interest rate. Yes, a debt to income cap that's lower than FHA's traditional cap, but it's available nationwide. So those are the 3 kind of down payment assistance programs that I wanted to cover today. With understanding down payment assistance, it's always a trade-off, right? You likely will not qualify for as much house as you would if you were able to go out and put the down payment down yourself, or as I'm fixing to show you, well, I'm not going to show you because I didn't create a PowerPoint for it. I'm going to tell you. When you look at these programs compared to, well, maybe I'll show you this. Yeah, we'll do that. Compared to some of the more traditional programs of USDA or VA, you will have some better options. So I'm going to pull this up for a second. Just give me. Got muted there for a second. So if you're watching this and you're a veteran, you should not consider DPA or USDA. The VA loan is the way to go. And I'm going to touch on the VA loan briefly, not because I don't love it or because it's not exciting. It's actually my favorite loan program, but it's like a whole other animal. And if you're a veteran, just trust me, use your VA loan regardless of what someone's telling you about, oh, VA loans aren't great and blah, 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 blah. Forget all that noise. If you're a veteran, use the VA loan. So I've got other videos on that. You can drop a comment in the comments, or you can send me a DM and I'll get you the information on that. If you're a veteran, you're watching this, use your VA loan. For everyone else, USDA is my favorite loan. And so you may tell that I'm a bit partial in the way that I talk about down payment assistance versus USDA. And there is a reason for that. I also believe that there is a lot of misconception about USDA and how you can utilize the program. And I wish that people knew more about the program, because especially in a state like Louisiana, which is where I live and where most of you are watching this, the sky is like the freaking limit with USDA in this particular part of the country, because there's so many areas that are eligible. So we talked about down payment assistance, and down payment assistance is still typically 640 credit score, except the empowered, it's 620. And it's the same interest rate across the board, whether it's 620 to 680 on that program, I believe. So you still have the 640 credit requirement. You have a income requirement that is lower now for most of these programs than USDA. You have an interest rate that's higher. You have a second mortgage potentially being attached to your house. The drawbacks are all there on down payment assistance compared to USDA. You want to know USDA's drawback? You can't buy inside the city limits. That's the drawback. In my opinion, that's the drawback. So if you want to live inside the city limits of, like I said, Lake Charles, Baton Rouge, Lafayette, New Orleans, Metairie, Kenner, Alexandria, Shreveport, Bossier City, Monroe, and you want to live inside the city limits, then no, this isn't a great program. So I get it. At that point, especially the bigger the city, the more people are going to live in the city because they may walk to work, they may not drive to work, those types of things. I totally understand. For everyone else that has the option to drive, like you have a vehicle and you can drive to work, you've got to consider USDA. Because here's the deal. Let me show you this. The income limits with USDA, which were recently updated, are $103,500 per year. Now, this is household income. So this is income that anybody in your house makes, has to be lumped together. So if you're married, it's you and your spouse. If you got kids in your house living with you and they're working, we'd have to use that too. So I guess there you go. That's another potential drawback. But the limit is higher. And then if you've got 5 people in your house, you can go up to $136,600. And this is the same across all parishes in Louisiana. We're not fancy like other states where we get to have variable limits based on population. You go over into Texas and Austin, and some of those areas are going to have, I've already left. See, I've already left Louisiana. Coming back, Louisiana. Hold on. Where you're going to have variable limits. But then the downside of those is, like in Texas, USDA is hard because even their suburbs have 35,000 people living in them. And so that's kind of the deal with USDA, is anywhere where there's a population of 25,000 or less is typically going to be eligible. And so what you see is with USDA, you see higher income limits with USDA than some with USDA. You do. You have lower interest rates with USDA because they're going to follow all of the traditional programs. So as a broker, 5s right now, totally doable with USDA. Maybe not today. I'd have to look at what the market's doing. It wasn't yesterday, but last week it was, and we think it'll come back. Okay. So you have lower rates, you have higher income limits. Your only drawback outside of the down payment assistance is the location that you live in. So let me show you this. I freaking love this program, man. Call me a USDA fanboy if you want. Okay. So we're going to zoom in here, okay? Look, if you're in Lake Charles, all of this is eligible. All these places where people live every day: Sulphur, Carless, Benton, Moss Bluff, DeQuincy, Kinder, Elton, Iway, Jennings, Lake Arthur, Crowley, Gaydon, Iota, like all of this, anywhere that's not orange is eligible. So you can zoom in Lake Charles and you can see that even in Lake Charles, once you get, oh no, I can't see the zoom out. There it is. Even in Lake Charles, once you get outside of city limits, some of these properties are eligible. So some of these properties off of Goche, Guelph Highway, all those types of things could be eligible, right? It's the same story, because I know people watch me all over the state. It's the same story. You go to Lafayette, right? Lafayette's a little bigger, but boom. Youngsville, most popular suburb in Lafayette, eligible. You come over to Baton Rouge, Zachary, Denham, Walker, Prairieville, Gonzales, all that eligible. Hammond, eligible. North Shore of New Orleans, Madisonville, Mandeville, Covington, Abita Springs, Slidell, eligible. Now you get into New Orleans. Again, New Orleans obviously not eligible. Metairie, Kenner, not eligible. But everything on the south side is, right? Gretna, Chalmette, Belchase, all of it eligible. Okay, you go up north, right? You go up in Alexandria. Alexandria, Pineville, not eligible. Everything outside of that is. Okay. You go to Shreveport, Bossier. Shreveport, Bossier, not eligible. But all these little areas outside of that are. Stonewall, Houghton, Blanchard, all that. Same story for Ruston's not, again, more than 25,000 people. Monroe, West Monroe, not, but a lot of areas outside. Sterlington, Farmerville, all those different places. Bastrop. Okay? You guys get the idea. You guys get the idea. So I love USDA. And so I think that if you're a person and you have a vehicle and you have the ability to drive and you need a down payment assistance program, then you should do whatever it takes to qualify for USDA, because in my opinion, it's a fantastic loan program that more people should take advantage of. And here's the deal. Let's talk about USDA's requirements, if you will. So a lot of people know and have been told that, you know, if you go USDA, you've got to have a 640 credit score or you're not going to qualify if you don't have a 640 credit score. Okay. So yes, for an automated approval. And even at a 640, you're not guaranteed an automated approval. You could be a 640 and not get an automated approval if you've had past credit issues or something like that. Right. So, but USDA doesn't actually have a credit score requirement that they impose. Most lenders impose a 640. Yes. Some lenders don't. The lowest I've seen is 580. And what that means is if you can qualify for a USDA loan using their manual underwriting program, you don't have to be a 640. And this is the part that I wish more people would understand and utilize, because it could help more people get into a house. It could help more people get into a house zero down. So everybody knows 640 automated approval, good to go. With USDA, we do have lenders that'll go down to 580, but right now the rate situation and the pricing, 620 is about as low as you want to be in this particular moment in time. But if you are under 640 or you can't be automatically approved, here's what USDA is going to want from you. They're going to want your debt to income on the back end, meaning like all of your debts and mortgage payment included, to be no more than 41% of your gross monthly income. They're going to want your mortgage payment to be no more than 29% of your gross monthly income. And honestly, we advise our folks, like our clients, like, hey, if you don't know where your payment should be, you really don't want your mortgage payment to be more than 25% of your income, right? We call that house poor. So they're going to want 3 months of mortgage reserves. So for math's sake and easy math for Channing, let's say that you have a $1,000 a month mortgage payment. It's really hard to do that in Louisiana. Let's call it $1,500 a month. So $1,500 a month mortgage payment. You're going to purchase a house. The payment's going to be, now this is all in, taxes, insurance, everything, $1,500 a month. Okay, that's probably like, I don't know, 180, somewhere around there. You need 3 months of those saved up. So that would be $4,500. You say, Channing, I don't have $4,500. Okay, we'll work on that. But it's not money the bank's actually going to take from you at the closing. So what happens is you have a no down payment program. You have a loan program that allows the seller to cover up to 6% of your closing costs, which is way more than you'll usually get. But it's very common to see anywhere from $5,000 to $8,000 credited back to you, which is usually enough to take care of your closing costs. Now, here's the really cool part. Because we're not taking that money from you, if you have that money in a 401k or some type of a retirement account or a savings account, we would use that for your reserves. So boom, now your reserves are completed. Again, it's not money we're taking from you. The bank, the USDA and the lender that's doing the loan just wants to see that if you got into a financial hardship, you have money saved up that you could use to still make that mortgage payment. That's 3 months of reserves. Next thing they're going to ask you for is 12 months of rent history on time, assuming you're renting, that you've paid your rent on time. If you've missed payments, that could be bad, would be bad. But 12 months rent history on time. If you made your mortgage 12 months on time and your landlord will say so, we get a document from them that's going to source that requirement. Now, what if you don't rent? What if you live with family? Here's the really cool part, and not all lenders allow this, but ours do, is we just get a letter from your family member. Now, you can't lie to us because we've had this happen before, and the lender knows. And it was a mess. It was an absolute mess. But if you're living with family, you can have your family member sign off on a letter that says, hey, they lived here the last 12 months, they're living with me. Boom, requirement met. So those are the two additional requirements if you don't meet the USDA's automated approval guidelines. So if you want to go manual, that's where you go. Now, you can't have any late payments either. You can have one 30-day late payment in the last 12 months. If you have more than that, you're going to be in a pickle. You're probably not going to qualify. Again, look at this the way the underwriter's looking at it. Are you paying your bills on time? Is your only issue that you're just struggling to have a down payment? This is not a program for someone that is not paying their bills on time. Most mortgage programs aren't. But if you're paying your bills on time and you're just struggling to come up with a down payment, then these are the options that are available. So that's why I love USDA. You don't have this second mortgage. You don't have this higher interest rate. You still get zero down. The seller can pay your closing costs. Most of our clients, because you do have to pay your appraisal out of pocket, most of our clients that go USDA and get seller concessions walk away with less than $1,000 out of pocket to buy a house. It's a great program. And I would 100% advocate anyone that can qualify for it to do so because it's better than down payment assistance across the board. Across the board. So I love USDA. All right, let's talk about VA for just a few minutes. If you have any questions about USDA or you need anything in that regard, hey, feel free to drop a comment, send me a direct message, go to our website. We've got a ton of stuff about USDA on there. I'd love to help you with that. VA, if you're a veteran, my goodness, this is the best loan program in America. It really is. Same great benefits of USDA, no down payment, right? But the best part is with VA, if you're a veteran, you need to be a veteran who is eligible or an active duty member who is eligible. If you were in the reserves, you may also be eligible if you fulfilled and you have enough points. And so there's a whole thing that has to go on there. We used to say 90 days of service, but that's not always the case. Of active duty service, that's not always the case. But if you qualify for a VA loan, it's no down payment. It has no PMI, zero. There's no debt to income limit, and there's no credit score requirement, although most of our lenders cut off at a 500. So if you're a veteran and you want to use your VA loan, great program. It's going to be the cheapest option 9 times out of 10, even over putting 20% down, conventional. And here's a fun fact. So we get a lot of people that come to us and they say, hey, our agent or this person or that person said I shouldn't use my VA loan. I should get a conventional loan because the seller won't accept my offer. So just want to throw this out there. VA loans outperform conventional loans, even the conventional loans where people put 20% down. What do I mean? I mean there are less defaults on VA loans than there are conventional loans. Let that sink in. Because a lot of times what we hear is that VA loans are for credit challenge borrowers or this or that. The other one that we hear, and I think this is why agents sometimes will give pushback, is the VA appraisal is difficult. So here's the deal. In my opinion, the VA appraisal follows pretty well the same standards as the FHA appraisal, but with one great benefit, and that's Tidewater. With VA, if the appraisal is going to come in low, the appraiser will enact Tidewater and let you know that that's going to happen. At that point, you have the option to provide 3 or 4 completed comps to justify the value of that home. So if the appraisal is coming in low. The other thing that I love is that once you do that, those comps are submitted to a VA appraiser. They don't even go back to the main appraiser on the deal. And the VA is the one that makes a decision. So there's no other loan program like that in America that's going to do all of those things for you. If you're a veteran and you have a VA loan, it's the only loan program in America that you've earned, first of all. Second of all, it's almost like a guaranteed approval. I'm not going to say guaranteed approval. I can't say that, but it's so close because they are so flexible on their credit requirements. There's no down payment requirement. The seller can pay 4% of your closing costs, which is usually enough. And there's so many different benefits to the loan program. So that's VA loans. Again, I'm not going to jump into it too deep. I've got a video on my YouTube channel. If you want it, I'll send it to you. I go deep into VA loans and I explain why they're the best and how you can get started using one. If you're a veteran, just trust me, use it if you have access to it. Don't worry about anything else I've said today. Just use that one. But that's zero down loans. So if you want to purchase a home and you're not really sure where to start because you don't have a down payment, listen, I won't lie to you. FHA is a lot easier to qualify for, right? The 3.5% down payment with FHA, a lot higher debt to income ratio, rates are comparable. It's easier to qualify for. If you have a down payment, please use it, unless you're a veteran. For everyone else, USDA is awesome. And for everyone else that can't do that, look into down payment assistance. But understand this whole notion, this whole idea that we need 20% down to buy a house. Let's get rid of that. I still hear it. I can't believe I hear it still, but I still hear it. This whole idea that, we need large down payments to buy houses. Let's let that in, right? And let's work on the things that we can control. It's not that hard to get to a 620 credit score, right? We're going to be hosting a how to fix your credit to buy a house masterclass here soon. And I have this part of my to-do list today is to set a date for it. And I'm going to show you, it's not that hard to fix credit. It's simple. It may not be easy, but it's simple, right? Pay down your debts, do these different things. We can figure out the credit portion, but what happens is people get in this hopeless mentality of like, I can't do it, I can't fix it, it'll always be this way, and then they just continue to live that way, and it never gets fixed. There is hope, and it can be fixed, and you don't have to shell out $600 a month to a credit repair company to do it. You just need a little help and you need a little advice. But the most important thing is that you actually take action on the advice that you're being given. That's the key. The down payment stuff can be figured out. The credit stuff can be figured out. The only thing that can't be figured out easily, in my opinion, so this is like it gets almost no love. Like nobody hardly ever talks about it, but your income is the biggest part. And if you're making $1,500 a month, it's very tough to be able to purchase a house because of the way the rules are. So outside of that, credit and down payment can be figured out. And perhaps income can be figured out too. Maybe you go to school, maybe you get a skill, maybe you jump on YouTube and learn how to do something and you make extra money. Like whatever it is, there are always ways to figure it out. So don't ever allow this kind of hopelessness to take you over. Like, I'll never buy a house. I'll never be able to do this. You can do anything you put your mind to, honestly. And this is one of those things. You just need help. You just need someone to guide you down that path. And if you're not a zero down borrower and you're watching this, hey, thank you for staying tuned. Like, I appreciate that, right? If you're in a great financial position, hey, that's a great part about working with us as a broker. We got great rates across the board, whether you need help or you don't. Because that's my goal. I worked with other lenders for long enough, and I watched how they financed their companies on the backs of veterans and poor people. And that didn't sit well with me. It just didn't. Should people with worse credit and a history of not paying back their loans pay a little bit higher rate? Absolutely, and they do. But it should not be to the degree that we see it now. Just honestly. So we don't do that, right? We made a decision this year at Bayou Mortgage to lower the rate we were already charging because we wanted to help more people. And guess what? We've been able to help more people. You have to adapt to the market that you're in. And so all this noise, like don't buy a house in 2023, guess what? I could go online right now. If it wouldn't turn my microphone off every time I hit the cable, which is in front of the keyboard, because I need to get a new cable. And I could show you how every year, 2010, 2011, 2012, 2013, 2014, on and on and on and on, every single year, there's all these articles. Don't buy a house. It's the worst time ever. But you know what? I bet the guy that was thinking about buying a house in 2010 and didn't wishes he did, because he'd have massive equity now. So don't let this fear permeate you and keep you from doing something. You need a place to live. If you can afford it and it makes sense for you, you should do it. If you can't afford it and it doesn't make sense for you, you're just not in that season of life right now, then there's no shame in that either. That's why you will see no more marketing from me on like, you're paying your landlord's mortgage. Everybody's in a different season of life. But don't let Uncle Joe or Tommy or the guy down the street who's never bought a house talk you out of buying a house this year. We have 0 down payment programs available. You can work on your credit. There are things you can do. So if you're interested in learning more about this, you can just shoot me a comment. Shoot me a direct message on Facebook. Shoot me a comment on YouTube. If you're watching on YouTube, in my About section, there's a way to book a call with me. I'm sure there's somewhere to do that on Facebook too. So, but I don't see any questions. Before I drop this stream, if you have any questions, definitely drop me a comment. I'm looking on here now just to see. I'll stay on for the next couple of minutes to see if there are any questions. And if not, that's it, guys. So thank you for tuning in. I really, really appreciate it. It looks like we got 6 people watching on YouTube and a couple on Facebook. So if anybody's watching and you have questions, let me know quickly. All right, guys, I didn't see anything come through, so I appreciate everyone tuning in, and I look forward to talking to you soon.